Welcome to another Ariaswave video. It's been so long since I've been talking to you, followers of the Ariaswave channel. Yeah, that's true. But I've never really left, right? It's just, you know, people go through things, you learn things, you decide to pull back, you decide to take a step back and appreciate life for a minute. But I have been doing a lot of analysis lately. And I'm going to make this really big market update video here. It's going to lead to a lot more bullish understanding of what is going on in these markets. And if you want to come along for the ride, I suggest you do so because you've already been listening for exactly 1 minute. So the next probably 19 minutes won't be so bad. Anyway, so my analysis goes deep. If you really want to know what's going on with the markets, according to Ariaswave, this will probably knock your socks off, right? So from 1987, we had a crash that, according to Ariaswave, is a wave C. Now, you won't get to understand what that wave C is about until I show you the Dow Jones chart. But we're going to go through this process of understanding this pattern before we do so. So we are in a wave D since 1987, right? So in the Australian stock market, that wave D looks pretty tame, right? It looks like a pretty relaxed pattern. Now, by the way, this pattern is not easy. It took me 10 years to figure out using a methodology which I created, which is Ariaswave. At the moment, it's currently not for sale. You're not going to be able to learn it unless you contact me directly, which I don't even mess around with trading me much in order to do so. But if you really did want to contact me, I might leave an email in the description potentially. I don't know yet. I'm thinking about it. But this video is going to open your eyes because this D wave is happening across all stock markets. It's part of the index. Now, the severity of the patterns you're about to learn from me because it took me so long to realize that every single index is tracing out the same pattern. But it took me so long to understand which parts of those index meant what. But they're all the same in the end. So stick with me and you'll find out a little bit more. So since 1987 in the ASX, we created a 5-wave move up until 2002. All right, so we had a weak 5-wave move, zigzag 1, 2, 3 was a zigzag, 4, zigzag 5. Right, now this is important because this is Ariaswave interpretation of a weak 5-wave move. Right, because when it comes to Elliott wave, a weak 5-wave move requires that wave 4 price action go into the price territory of wave 1 and 2, but this never does, which is why you should not pay attention to Elliott wave. Ariaswave was designed in real world scenarios. Anyway, so wave A happened after that. We had a wave B, and you're probably thinking, that's a pretty sharp wave B. How did you know that? Well, I highlighted the B wave in between. Now you can just pay attention because we have a lot to cover. I can explain all these things later. C wave was the GFC. D wave went all the way to 2021, the end of 2021. Wait a minute. So what is this pattern that you're showing me? You're probably thinking. Well, it's actually a D wave. So in terms of Elliott wave seems to think that a D wave is just a 5-wave move with an A, B, C, and then a 5-wave move, right? But Ariaswave says that it's actually a 5-wave move followed by a 5-wave correction, right? So 5-wave correction means, yes, exactly what you heard. And then the 5 waves up to complete the zigzag. That's a complete Ariaswave correction. So we had the 5-wave move happen and then the Ariaswave correction. When did that end? 2021. But anyway, let me continue what I was saying by getting rid of all this extra information here. So that actually ended here in 2022 when we started to produce this pattern that came after. But up until that point, we had only been within a B wave of a D wave. So according to Ariaswave, the B wave is the corrective portion of a zigzag. So the part that comes next is the C wave. That's the part that's supposed to be impulsive. But because it was so weak at the beginning, well, you know why they call C waves C waves is because they're the strongest move. I mean, check out GFC was a C wave, right? Sorry. Here. And the 1987 crash was a C wave. Now, you won't understand exactly what that means just yet. Now, the E wave here was actually, yeah, the COVID was not a C wave. As much as I used to think it wasn't. But that's a video, a topic for another video, because there's also these reasons why this trend is going on so long is because they had to print money and they needed reasons to print money. And I can create a series on that alone. So forget about that. At this point, let's just focus on the main thing. So here we can see that we had a 5-wave move, wave A, we had a corrective move till 2022 for a B wave. So that's a B wave corrective pattern that lasted since 02 to 2022. So it's basically what, 20 years? Right. So we had the A wave that lasted since 1987 to 02, but the C wave will be a lot sharper and quicker. And you might be wondering why. Well, if you look at the macro side of things, we had a lot of monetary policy reasons why this is going to pump pretty hard very quickly, very soon, especially because everything's been leading up to this point. So has my analysis been leading up to this point. Now, that's just the Australian market. This is a very tame version of this pattern. Now, all markets produce the same pattern, right? So let's go to the Dow Jones chart where we have the exact same pattern, but I've got a whole bunch of squiggles on there, probably from my last presentation that I did. You don't need to know about that. Anyway, so let me just get rid of these real quick and we can continue. So, okay, great. So basically, we're looking, sorry, there are still a few more patterns going on here. So the Great Depression was a wave C as well. See, another strong move. So what was that after that? A wave A. So we have a really massive wave D. So we have the wave A of a wave D. So this is where things start to get crazy. We had a wave A, a B. That's where you saw wave C, 1987 crash. Except this wave D of that wave D is expanded. So we're looking at a type 1 expanded correction at this point, and we're going to see the Dow Jones probably go to 200,000, right? And that's very important because this is the exact same pattern with a different setup within the structure. Well, what's the different setup? Well, actually, the setup's the same. It's just that the money printing led to a zigzag looking like a 5-wave move. And this is what's been the problem with my analysis the whole time, is that I knew this wasn't like an impulsive 5-wave move. And by the way, when I say impulsive, it's not Elliott wave that I'm necessarily referring to. It's just that Elliott wave called 5-wave moves impulsive or motive waves. So Ariaswave is not 100% different than Elliott wave. It still uses some key components. The thing that Ariaswave really focuses on is the corrective portion of any move, right? See, Elliott wave was very subjective with how the correction could unfold, but with Ariaswave, the correction is very specific. And it's only about your interpretation of the 5-wave move that makes it not a 5-wave move. At this point, it's a correction that's basically a 5-wave move, or it looks like one, but it's not really. So basically, what I'm trying to say is that the D wave looked like an impulsive move, which is why in the Australian market, which I just showed you, it looked very normal. But here, it's not looking normal, but it's the same pattern. Now, the wave E ended in 2022, which means similar to wave A, price will go, pretty strongly towards a similar length, which would probably be around $200,000. So since 2000 all the way to 2020, two, you could say, we've been in a kind of like a bullish correction, right? So what that means in terms of, if you think about it from a macro standpoint, is that we've been doing a lot of money printing in preparation for that thrust up. So if you look at the larger long-term pattern, this is actually going to it's going to result in some problems, because if you understand what Ariaswave means in terms of expanded corrections, you're probably going to see something that goes really high and falls back down to certain levels, which I'm not going to get into in this video. But if you're interested in Ariaswave, I can certainly teach you. Now, the other chart I wanted to show you real quick was the Nasdaq, because if you thought this chart was crazy, well, guess what? All markets are producing the same pattern. So if you go to the Nasdaq, and by the way, I'm not bearish. This is actually really bullish. So get the bearishness out of your head. Now, this applies to crypto. So if you want to see me talk about crypto, well, you're going to have to like the shit out of this video, because I thought, you know what? What's the point of me talking about this if nobody watches it? So might as well get some feedback first before I continue, right? Anyway, so 1987 crash, we had the beginning of this move, right? Because that's what it's about. Now, same pattern, except more crazier correction. Yes, you guessed it. The Nasdaq is a complete freak show. This is the same pattern, but it is a corrective zigzag looking like a 5-wave move, right? This is where all reality starts to become pretty stupid right now. So yes, you are seeing that correctly. I believe that the Nasdaq will go to about roughly 400,000, right? Now, this is no joke. Only the Nasdaq could produce such results, especially because, these tech stocks have become, basically a pretty fundamental part of our everyday existence, right? So, at the moment, the the Nasdaq is like 23,000, which is like, almost half of the Dow Jones. But I predict Dow Jones to go to 200,000, while the Nasdaq to 400,000. Right? It's all based on the same principles, right? Except it's a way more leveraged market. It's got the most stimulus. It's got the most backing. It's the future. It's AI. It's everything you could ever imagine, right? It's basically our everyday life, and it's hyped up more than you can imagine. I mean, just take a look at this price action. It's insane, right? This is meant to be a zigzag, and it's actually looking more impulsive than the actual impulsive move. So this is why these markets are so distorted. So if you think that this won't result in some kind of problem after this hits the target, something that, kind of tries to go down, resolving to the downside somewhat, look, I'm not here to point you to doom and gloom, but for now, you could expect some pretty big gains, right? So let me just keep you there, because if you understood what I can see with cryptos, you could sort of get where I'm going with this. This thing's going to get out of control. It's going to get pretty serious, right? It's going to go wild. So if you want to start to, get my view on this, and believe me, I have some views, I suggest you start to really like my videos, follow, and we can talk after you do that. We can talk, right? Because, and I'm serious. Like, I want to do some YouTube live streams, and you can come along and you can basically give me your input, your ideas, and I'll give you my real life feedback and answer some questions if you had some about Ariaswave, and you can learn it as well if you wanted to. So for now, I will leave you with that. And if this doesn't, you know, pique your curiosity, then I don't know what will. But this is a methodology that I discovered, that I created over 10 years ago, and it's taken me about 10 years to understand this pattern. So hopefully this has been informative for you. And yes, we are living in a time of insane monetary theories and, government fiscal policies. That it's not a surprise, that it's leading to this, especially after having three major events happen. One, 9/11, war on terror, money printing; GFC, bailout, money printing; and COVID, money printing. So those three things leading to the next massive thrust up. Please stay tuned. I'll talk to you soon.